Let's bring in our late news money man, Scott Phillips from Motley. Scott, good evening to you. Does the prospect of an extended lockdown in New South Wales cause concerns for the federal government and indeed the Reserve Bank?
Peter, good evening. It absolutely does, unfortunately. You've hit the nail on the head. Of course, there's been plenty of lockdowns in other states and other cities over the past few months. But for better or worse, New South Wales and Sydney in particular remains the engine room of the national economy. And facing what could potentially be an extended lockdown, about $1 billion a week it's going to cost the national economy. And the longer it goes on, the more permanent damage it does. Jobs lost, businesses potentially closed down. Those are the big concerns. And how quickly we get out of that morass is a real question for the RBA and the government.
OK, you talked about Sydney, New South Wales being the engine room of the economy. Would more financial support for people and businesses help the big picture?
This is the real challenge, Peter. I mean, obviously, yes, it would. I mean, we know any more money you can put in people's pockets is going to help the economy. The question for policymakers, of course, is how much, when, what's too much, what's too little. That's the big question. Of course, we know the government spent well over $100 billion over the past 18 months dealing with the COVID crisis. It may well come to that. And I think, well, we don't want to see taxpayers' money wasted or splashed about unnecessarily. And certainly there were some issues with JobKeeper and JobSeeker the first time around. The reality here is we need businesses to keep employing people and investing. We need consumers to keep spending. If this lockdown does drag out, it is very, very important that that money keeps going around the economy.
OK, let's go to the share market. More records on Wall Street over the weekend. What does that mean for investors here tomorrow?
Yeah, we had a big fall in our market on Friday, Peter, so we look like we're going to reverse that. The current futures are up about 1%. Now, of course, there's so much breaking news, so much current and constant news coming. Anyone's guess tomorrow morning, but at the moment, it looks like the ASX will open up about 1%. As I said, reversing Friday's falls, and on the back of that, good news out of Wall Street. Fingers crossed, we might yet be off for a good start on the ASX, even as we try and digest the ongoing news.
Scott Phillips, Chief Investment Officer from Motley. As always, thank you.
Thanks, Peter.